Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 8th of October 2021 and we're producing our Friday morning gold and silver price update, forecast and daily news. Today we have the Non-Farm Payroll Report, which will be the last one before the FOMC next meets to decide on its bond buying tapering program. We shall get to it straight away, as this video is slightly longer than usual, as we point out why we believe the non-farm payrolls will be strong. So let's take a look. Welcome to Illuminati Silver. It's Friday, the 8th of October 2021, 09:15 AM GMT +1. The weather today, cloudy but rainless. Yes, it's a dry day, but the clouds have gathered and are forming a rather bleak blanket. But we suspect, not having seen any cumulus nimbus clouds per se, it won't rain. However, there may be some rain today on a number of fronts. The first is Europe's facing cruel winter as power crisis threatens to swamp aid. And also we have today's Non-Farm Payrolls report. So let's just take a look at some of the headlines. The surge in Europe's gas and electricity costs threaten a cold, expensive winter for the continent, as government efforts to protect citizens look no match for the scale of the crisis. A handful of governments have pledged about 10 billion euros so far in subsidies and other assistance for consumers struggling with the unprecedented cost hikes. But that's dwarfed by the 100 billion euros in additional energy bills faced by customers in the European Union this winter, according to Greek government and analyst estimates. Much larger government intervention and possibly mild temperatures will be needed to avoid tens of millions of families across the continent bearing the brunt of price increases estimated to run into several hundred euros per household. So yes, indeed, we are looking forward to a winter that is going to be costly indeed. However, what could cost investors is how the Non-Farm Payrolls report comes out today. And we have stocks mixed, futures steady ahead of jobs data. Stocks were mixed and US futures were steady as investors awaited a key employment report for clues on the Federal Reserve's monetary policy. Treasury yields rose. European stocks fell, with tech firms sliding the most. Asian shares got a boost from gains in China, where markets reopened after a long holiday. Contracts on US gauges were steady after 3 days of gains for the S&P 500. Global stocks are on course for their best week since early September, after the US Senate moved to avert the risk of an immediate default, ending weeks of political stalemate. Well, at least until December, when it raises its head again. While an energy crunch and commodity-fueled price pressures remain cause for concern, investors will first turn to Friday's jobs report for an indication of the Fed's timeline for reducing bond purchases. The 10-year US Treasury yield reached the highest since June, and the dollar edged higher. Oil extended a rebound, on track for a 7th weekly gain. Now, in a few minutes, we shall highlight why we think the jobs report will be quite strong. And we'll explain why, as we say, in a few minutes. Going over to the BBC, Kwarteng to meet big energy users as cost spiral. Starter salaries rise at fastest rate in 24 years. We'll come on to this in a moment. Senate averts US debt default. And travel firms hope for boost after UK red list cut. And wait for it, Tesla has moved its headquarters from California to Texas. starter salaries rise at fastest rate in 24 years. Now, this is relating to the United Kingdom. However, remember, we are likely to have increased inflation, first of all, due to energy prices going up. Secondly, due to shortages of transport, particularly in terms of lorry drivers. So supply shortages will push the prices up. And of course now, if we have higher salaries, that's a third factor to increase the current inflation rate, or at the very least prevent it from falling. In the United States, biggest headline: Senate averts US debt default crisis. Lawmakers vote to extend the debt ceiling until early December, avoiding an historic default. Now, McConnell paved the way for the Democrats to basically get this passed. The reason being is that he wants the Democrats to vote entirely on their own for the reconciliation bill, which all of the Republicans will oppose. Arguably, the reason being, it's political, because then, once that bill is passed, the Republicans for the 2022 election can say, look how these spending Democrats just fritter away your money. We were particularly pleased to see it because should the deadline have been reached without an agreement, then there would have been financial carnage. Equity markets would have plummeted, potential downgrading of the United States, and dollar reduction by significant sums. So it's a good move, A, for the Republicans, but B, for the country as a whole. So what else is in the news? Texas abortion resumed despite legal fears. False science behind ivermectin hype exposed. Woman burned trying to save dog in Yellowstone. And US pharmacies face moment of truth in opioid trial. Let's have a look at the trials of the dollar. Up 0.07 at 94.29. Energy prices up $1. And we now have WTI crude rapidly approaching the $80 level, where Brent crude has rested for quite a few days now. Equity markets yesterday in the US broadly up 1%. Asia Pacific overnight broadly up 1 to 1.3%. Europe and the UK broadly down. UK up 4 points, which is 0.06%, but the other markets within Europe down 0.25%. Now, why do we think the employment data today, the non-farm payrolls, could be quite positive? Well, if we go back to Wednesday, we highlighted the fact that the ADP employment report for September came in at 568,000 jobs, against market expectations of 425,000. So that was a very strong positive result. And as we have said on numerous occasions, approximately 80% of the time, non-farm payrolls align with the ADP employment report, not in terms of the exact percentages, but in terms of direction. Yesterday, we had the initial jobless claims, and again we can see that for the October the 2nd week, the jobless claims came in at 326,000, below the previous week's 364 and expectations of 345. Then coupled with that, the continuing jobless claims report has come in at 2.71 million compared with the previous 2.81 million. So these two reports are suggesting an improvement in the jobs situation. Now, the issue, of course, is is that improvement going to continue through to the non-farm payrolls, and to what percentage? And today we can see that the figures are due out for September. Now this is important. In August the figures were 235,000. They were grossly disappointing. Expectations now are 500,000. If today's report is considerably over 500,000, we can expect a further strengthening of the dollar and, in our view, a fall in gold and silver prices because of the strengthening in the dollar. You see, this is the last non-farm payrolls before the Fed's FOMC meets on the 2nd and 3rd of November. And on the 3rd of November, it is expected that Jerome Powell, the Fed chair, will make the announcement as to what is going to happen with tapering of their $120 billion a month bond buying program. We would argue that if this jobs figure is significantly higher than 500,000, then this will almost, and we say almost because there's still time between now and the 3rd of November, guarantee the tapering coming in this year at a reasonable level. If, however, those figures far undershoot that, we may still have tapering, but it's more than likely going to start in 2022, or if it is introduced this year, it will be at a much milder level than anticipated. That's if there is tapering at all. Now, of course, you can't ignore the unemployment rate because all these go hand in hand. So it's not just new jobs, but what will happen to the employment rate, and that's expected to come in at 5.1%. And then in terms of potential wage push inflation, we are looking at average hourly earnings to see if that is going to come in at expectations of 0.4% when you had 0.6% in August. Now, on top of that, we also have the announcement for wholesale inventories for August, but frankly, that figure will pale into complete insignificance compared with the non-farm payrolls report. And then next week, and we'll cover this on the weekly roundup tomorrow, we have next Wednesday the Consumer Price Index, core CPI, which are important, and the FOMC minutes. Though, again, the jobs data is going to really push the agenda for the next FOMC meeting. And then on Friday, we have retail sales, which will be extremely important, and another factor that the FOMC will take into account. So, how is gold and silver looking ahead of these figures? Well, we can see that over the last 24 hours, gold is down $4, still holding above what we term the crucial support, really, of $17.50. So it's standing at $17.55. Silver, likewise, although it's down $16. It is currently holding at $22.50 again, which is the level of support we need to see, which will act as resistance if silver falls considerably from here. We have to point out that yesterday we did see a dip in silver prices as far down as 22.41, but they then very rapidly recovered, only to fall back again. So we have an interesting day today. Now, if the figures are bang on expectations, then we will see some marginal movement and maybe a mild strengthening of the dollar, but we will not see any significant move. It's only if those job figures come in much higher or much lower will we expect to see gold and particularly silver move a reasonable amount. Talking of moving reasonable amounts, Bitcoin this morning is back on the rise, up around $800 in the last half an hour. In fact, now it's jumped even further, so it's up nearly $1,000 in the last hour or so, and we have Bitcoin at $55,000. Market cap $2.3 trillion, and Bitcoin's market cap on its own is $1 trillion. There's no stopping the cryptos since the beginning of October, or particularly Bitcoin, and pundits are saying before the end of the month we'll have a market cap of 2.5, and many are predicting a $3 trillion market cap by the end of the year, with some even talking about 4 trillion. We'll hold our breath on that, but certainly 3 trillion is possible, unless there is an equity collapse which will bring the whole crypto market down with it. That's it for now. Tomorrow, reminder, we have our weekly update. We will then give a brief analysis of the jobs report and what that means going forward for prices next week, though we suspect the damage will have been done by then because it'll all happen today, quite possibly. And meanwhile, watch the figures, stay safe, have a great day, and meanwhile, please give us a thumbs up, subscribe, and press the bell sign. Until tomorrow, see you soon. Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.